Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And let's start the show. Today is a very interesting company I have got in KYC for you, but some hints before I reveal the name. It's a kitchen solutions provider, sinks, faucets, and a lot of surface area products are there. The second hint I would like to give you, and it's a very big hint, it's backed by Sunil Singhania's entity Abacus. Also Ashish Kacholia is also backing this entity. So there are some large investors already backing the stock. Very much interesting, right? But let's see how the stock has moved also. That's another hint I'd like to give you. Last 1 month stock is up 21% as well. Now you must be wondering which company is that. I'll give you some more hints. You should be a bit careful about it. And the company in focus is Carysil. That's what I'm talking about. It's almost a 30-year-old plus company, and we'll be talking about the company's growth trajectory as well as what the industry stands. But the question remains is, why have I called the company in KYC? There are some questions which needs to be answered by the management. The revenue and the margin guidance side, especially the margins, gross margins have kind of, actually you could say topped out. So will these margins go up or will there be a pressure going ahead? That's the query which everybody has asked who reads KYC. Also the tariff benefits, once the clarity emerges, particularly in the export business, how much inquiries start picking up. The US, UK business also the company has, the Europe business is there, and it's an international exporter. Also the Capex utilization and the expansion plans, some plans were deferred. They're waiting about the clarity from the US trade tariffs. When will be the important timelines for these plans to start for different categories? That's a very important question to be asked for the company. And also the demand trends in the client confidence is one of the most important things, how the inquiries are picking up and from where and for what product. Also the quartz-sink business, the growth outlook for it, that's one of the key major revenue drivers, and how things pan out, especially in the US markets post the clarity which we might see in the trade tariffs or not. That is where it's a cliffhanger for a lot of export plays and the new product pipeline, so that they de-risk their portfolio, and some new surface area segment, that's what they call on the kitchen ecosystem. That's what the company is focusing on. On the show will be Anand Sharma. He's the CFO, and we'll ask Anand all these questions about the company. But speaking of about the company, let's give you more details about it. And largely I have given you some hints, but these hints is not enough for a show in KYC. We need to explain it to you. The first one is the kitchen solutions provider, sinks, faucets and other products are also there. I'll give you the detailed analysis of it. Remember, this is Asia's largest and world's 4th largest quartz-sink manufacturer. A unique product, and the way the premiumization plays out, and they are having a good market share in that. Also, it's the only manufacturer in Asia with the German technology, and the way the supply chain is moving, company stands to benefit a lot. 6 state-of-the-art manufacturing plants, 4 is in India and 2 are in overseas. That's an interesting take, and its presence is across 60 plus countries worldwide. Another important trivia I would like to give you about this company, they are having 4,500 dealers across India. India business is also a decent contribution coming in terms of revenue. I'll give you all those details as well. It's a diverse customized portfolio of 500 SKUs. These are the number of units, so different product categories which the company deals with. Key shareholders, look at that. Sunil Singhania, promoted Abacus, has 5.34% stake in the company. This is coming in the December quarter. Ashish Kacholia has around 3.5% stake. So that you can see, markets are large legends. They're almost having 10% stake in the company. That means there must be something here. Let's talk about the sectors which they are operating in and what's the planned capacity, or you could say the current capacity. I'm sorry, this is the units per annum. Quartz is around 10 lakh. Steel sink comes in at 1.10, and just is starting, appliances and faucets, that comes in around 50,000. But of course, this is the kitchen appliances we are talking about, and this entire setup is the kitchen segment. The key clients, especially the global ones, is something which I'd like to talk about. And remember, these are long-term agreements. This includes Karan, this includes IKEA, and also Grohe. Just, forgive my pronunciations, I'm not good with European languages, but nevertheless, I'm decently good when it comes to the companies and their numbers. Let's go to the other sectors also to look at, and the product revenue breakup. That's the thing. Quartz is still 48%, but from 2020 chart I've seen they have de-risked their portfolio, and it seems it's a good play, you know, in their strategy. For the surface area, what you go inside a kitchen, a lot of products are there in the kitchen, that is called surface area, that has done well. Apart from that, looking at the kitchen appliances and the stainless steel sink also, that is the entire product revenue coming up. But after that, the geographical revenue, and it seems it's very much decent. And UK, remember, there's an FTA trade completion already done. USA, you talk about it, the tariff issues are getting solved, but from that 50%, now we are in the teens. There is a negotiation going on, and company had a wait and watch policy, and they were giving some US discounts also. Because of that, the revenue growth was lesser than the volume growth. But India business is decent, it's 18% and rest of the world is 20%. So you see the diversification is actually benefiting the company. So whenever any good geographical news flow comes, that is where a good bump up will come. That's why the main reason for me to show you that. But there was a con call also, I listened to that, and some important points have come up. I'd like to mention them one by one. The first is the new horizons they might open up in the exports market after the trade deals, especially I'm talking about the company having a German tech, good supply chain systems globally. Another key takeaway is the US services that expected to grow around 15% as per the management, and the UK business will still be soft. That means we are waiting some clarity. It's not that you're going to get all good news in the company in one shot in a short period of time. It will take time. And a very important statement is the fourth quarter would be better than the third quarter. Third quarter results are out. I'll show you that, how the numbers have panned out. Some concerns are there, we'll address that. Q3 revenue growth was lower, but the volume growth was on the higher side, and this US discounts, that is what was impacting some of the global numbers. So is the company giving more US discounts right now in fourth quarter also? That's something to look out for. But if you are an investor, you should be looking at one date which the management is talking about, April 4th. Key announcements will be coming in. This might be their budget planning, this might be their expansion plans, and everything else. So if you are an investor, if you are a stakeholder, April 4 is the day. And of course, before that, KYC, the show is there, which will give you all that perspective about the company and the growth outlook. So this is the entire talk about the company. But about KYC is also very much important, because we follow a standard format so that we give our viewers the maximum which a KYC show can give. Income statement, balance sheet, cash flow, these are the numbers which you talk about. Apart from that, return ratio is also very much important. This includes ROC, this includes ROE. But apart from the numbers, we need to see how the institutions have played out. Remember, two big marquee investors are already loaded in this stock. Almost 10% stock they are having. That's the shareholding I'm talking about. Street cred, kitna paisa bana? 1 month, 6 month, 1 year. That's what we talk about. And also from its listing, or we could say like almost a 5-year basis. Also, if you're a long-term investor, valuations largely, they do not have an apple-to-apple comparison. So I'll be comparing the valuations in its various stages of its life cycle and the outlook, industry and company specific. That will be the key triggers ahead. So we will talk about that. So this is the entire picture of the rating parameters we'll give to Carysil. But the first one is the income statement. It's the most important thing to look at. And you must be wondering, the revenue, EBITDA, profit, the last 3 years, it's been decent. But of course, FY25 was an impact. 9 months, FY26 also we saw. So it's been a decent growth. I wouldn't say out of the park. It still takes time. And there are some overhangs, and those overhangs are coming in the 3-year CAGR numbers. But it's not really bad. Neither it's really good also. Let's talk about the Q3 numbers, how they have panned out. And luckily, the EBITDA numbers is something which caught my eye. Of course, PAT numbers are impacted. There are various reasons for it. The margins are still under question because, of course, the company is putting in money, expanding capacities. But net, it is still a mixed view coming in, and neutral on the long term, mixed on the short term. And the margins itself, we see in the third quarter, it's trying to step up. That's what I really liked about it, that company is moving towards that 19%. Remember, their backward integration also is at play, but there are other key factors also. The detailed ones, we'll ask the management. Net, I would give a neutral rating when it comes to the income statement. Let's talk about balance sheet. And during this time, whenever the industry issues are there, there's one unique thing about this company I noticed. They have started working on the debt equity ratio. That level has come down. Interest coverage ratio, the interest which you need to pay for loans, that has gone up. So that's a very good sign of a financial position of a company. And the cash balance, that's also coming up at 68 crore rupees. That means company has some kind of a dry powder to spend. Now, where will they spend? Will it be expansion? Will it be a shareholder reward? Or maybe another acquisition, because they already do UK and US. In the history, I've seen 5 to 6 major acquisitions. So, the company is at a sweet spot with the money. And because of that, a good balance sheet management, I'll give this a strong thumbs up when it comes to the balance sheet. But apart from numbers, another third important number is the cash flow. That cash flow is very much important irrespective of the business cycle. And cash flow from operations, that has actually kind of lightly narrowed down. It's around 60 odd crore rupees. And these are the net cash flows you're looking at. One thing interesting was in the presentation was the EBITDA to cash flow ratio. That itself has gone down. It's at, I could say, a multi-year high, but that was for FY25. So this side it was benign, but their presentation in the third quarter was very decent. But adding both of them and giving a balanced approach, I'm still not convinced. I'll still give a neutral rating when it comes to the cash flows, and we need to see, as you know, the months and the quarters go by, what does the cash flow numbers mean? Return ratios, that's a very big concern, and the company itself mentioned it, why that is happening. The return ratios in FY22 was 26%, and of course the listing numbers this keep going down. It's around 12% now, half. And ROC also, the story remains the same, but remember, there's a lot of changes happening in the company. I would like to mention, the first is, of course, they're putting in a lot of investments, and these investments need time. That's why you see the pressure on the return ratios. Let's pull out the ROC numbers also to give you the feel of what it was. It was 33%. Then it almost went down one third to 22, and then down at 18 coming in. So, of course, the return ratios are under the pressure. Concerns are there, but will this bottom out going ahead? There are good signals, those green shoots, but I'll explain you that in the outlook segment, not now. So, net, it's a thumbs down when it comes to the return ratios. But apart from the numbers, shareholding is very much important. We spoke about two marquee investors, Ashish Kacholia and Sunil Singhania, has promoted at entity. Abacus already invested in the company. That comes under the public, and some comes in the DI. There was a good increase coming. March 24 was 7%, and then a 4% increase coming into 11%. That itself shows the strength of loyalty coming from the DIs, and promoters, however, have reduced the stake, but it has been absorbed by institutions from 1% in FIs. Now it's up to 2%. So now the foreign interest is coming in. There are some really strong marquee investors. DI participation is going up. It's hitting all the cylinders when I come for this analysis of the shareholding pattern segment. So I'll give a strong thumbs up for that. But let's talk about the street cred, how much the things have moved around. And last 1 month, the spike has come in. Stock was in you could say, almost in a 8 to 9 month consolidation. There was a big dip, and then a good jump up coming up, of course, on their back of their earnings and the sentiment opening up. But 6 months, it was flattish, I spoke about. But after that, let's see how much returns have come in. 1 year, stock, despite so much happening, is up 64%. And if you see the last 5 years numbers from the listing, its stock is up 148%. It has been a very good, decent compounder. But over the last 4-5 trading sessions, some profit booking is definitely happening. And that's why for traders or a very short-term investors, at least for a week or 7-8 sessions, it was not good. And just to balance that out, I've given a neutral rating when it comes to the street cred. Let's talk about the valuations. Valuations also very much important. And there's a very big hype when the company had come up in the IPO. The peak near the IPO, that number actually is a mistake. It's around 55 times. And if you talk about it, the peak in 2025 was 31 times. And even despite the peak numbers, the current numbers are at 22 times. That means you could say the valuations are still cheap. These are the 12-month forward P numbers we have taken. So I am going to give a strong thumbs up when it comes to the valuations. We spoke about a lot of these numbers, but the most important thing right now, and the street is always forward looking in the stock markets, is the outlook. Now they have stated that the domestic business is expected to grow 3 times in the next 3 to 4 years. That's around 18 to 20% revenue contribution, and an additional quartz-sink capacity units that's likely to come on stream in April 2026. This is very much important because there was a delay. That's where the patience of the investors was tested in this counter. The kitchen faucet stainless steel sink expansion plan, they are also there. They're on the lower side because, of course, the largest amount of sales happen in the quartz-sink. But nevertheless, the expansion is going on. So return ratios might be depressed going ahead. Also, product mix upgrade, and when that happens, high margin comes in, and the manufacturing scale efficiency. These would be the margin triggers. So we'll definitely ask the margin guidance also. But overall, the outlook looks very strong. So I've given a thumbs up. But let's add up all the ratings in our analysis to give you the entire picture. The income statement, the company needs to show some good numbers in the coming quarters. Expectations good of Q4. Balance sheet, very good management, I must say. Hats off to the financial team. But the cash flow return ratios, that's a bit, questioning for the investors. Shareholding, we have star investors already there, and the institutional pickup is there. Street cred, it's been largely neutral, but last 1 month stock is up 21%. Last 4-5 days, a little bit of profit booking coming in. Valuation still very cheap, and outlook also remains strong. So let's add up the total KYC rating to give you the entire picture, and comes in at 5.5 out of 8. This is largely above average in our analysis in our KYC rating show. But to give us more clarity for Carysil, we are joined in by Anand Sharma. He is the CFO at Carysil Group. Good afternoon, Anand. It's always a pleasure to talk with you. Anand, talking about, first of all, the US trade deal. You had been giving US discounts, but now it seems a lot of clarity is coming, especially for your business. Already UK trade deal has been done. What's your view right now? How much things open up for the company now as we start to understand that the global trade might be stabilizing?
Good morning. Thank you for having me on this show. I think it's a sweet spot for us. This trade deal is something we were looking forward. So I think with the clarity coming in, we are going to go very strong. Uh, we were like a 50% tariff, and this now came down to 18 with the trade deal going to happen, and in all probability going to settle below 18, maybe 15 or anything. So overall, this is going to have a very good impact on our business. Our customers are happy. We are very upbeat on the US, and we have a lot of good thing coming in. In terms of tariff, I think we are at a good spot. Uh, we had given some discounts earlier to our customer to mitigate the tariff impact, which will be rolled back. So that is going to have a positive impact on our profitability also.
All right, but let's go deeper into the number. And I must say, the way you have managed the balance sheet in these, I couldn't say trying times, but definitely last 12 to 18 months, that has been done really well, I must say. But Anandji, the
Thank
question
you.
is, the cash balance is definitely a little bit on the higher side right now, and D ratio also is on the lower side. Are we looking to deploy this cash in your expansions, or are you looking at acquisitions? Because I remember in your older business playbook, you had a lot of acquisitions coming in the US, UK, and you must have delayed those, seeing the uncertainty in the tariffs. Your views on that?
Yeah. So I think the cash balance, what you see, and related return ratio, the major is because we had QIP. So with the QIP, now the expansion plan is going on. So that fund is it in the process of deployment. Once this fund get deployed, we'll get the return, and this ratio also get improved. So I think it's a matter of time. We already have our capex going on. Once this fund of QIP, which we have raised, fully deployed, we start getting the revenue and the profitability. It is going to improve from here. Like you said, debt equity is already reduced. We have already improved on the EBITDA side. And with this fund, which is going to be, which is under utilization, the capex, the revenue will going to increase, as well as we are going to increase our profitability. So I think all the ratios, which currently, because of the QIP, you are looking at the numbers, which is not on the side which we want, that will come and reflect in the next financial year.
Of course, we'll hope for that. But the margins, the return ratios, I just saw your numbers itself from your investor presentation. You yourself stated, a lot of activities are happening. The return ratios are, dipped. Gross margins are dipped. So is this the bottom? And if yes, what could we expect in the margins in the medium term, and even the ROE, ROC numbers? What are you looking at, Anandji?
So, see, we have delivered the result in the worst period. The company was like US is a big market for us with the 50% tariff. Still, we able to deliver like a 19% EBITDA. Gross margin on last quarter also improved. So overall, as I said, there was some discount which has gone in the previous quarters. That will be rolled back, and from here onward, we're going to improve both on the revenue side as well as on the margin side. So I think, and on the return on equity side or ROC, as I said, the fund which we have raised is already getting deployed. So once this is fully deployed and the capex is fully complete and running, this all ratio will get changed and you'll see the improvement. Uh, Coming to the earlier, I mean FY22 ratio, I think that was the COVID year where we have a lot of sales happening and we have not started increasing capacity. So that may be an exceptional, but going forward, as I said, we are going to improve from here on the ROE and ROC both.
By when we can see that? Like 2 quarters, 3 quarters?
So yeah, so I think next financial year will start seeing improvement quarter on quarter basis, and of course next 27-28 will be fully you can see the impact. But even FY27, I think quarter on quarter you can see the improvement coming on these ratios.
Right, that's a very important take which we have given. But the queries on the US discounts, the Q3 discounts were definitely there. Are you giving Q4 discounts also? Because you mentioned in the con call that Q4 will be better than Q3. So just give us that perspective of both of these queries.
Okay. So like quarter 3, it was full discount. Now quarter 4, till this tariff came, I mean, the lower side of tariff, which is going to come from the February onward. Already 1 month we have already with the higher tariff rate. Now with 1.5 months, we're going to roll back. It is not fully rolled back. As I said earlier, the tariff was almost nothing, from nothing to 50%. Now from 15 it came down to 18%. That means there are some impact. So it will be pro rata rolled back, but this will definitely going to improve our margins going forward because the rollback already happened in this month only.
Right, so the rollback definitely happening, and we actually saw that in the stock prices also. But apart from the non-US markets, what are you looking at? The European market, the rest of the world market. Let's just leave USA aside. How are these markets looking like? Is US going to be UK going to be a soft quarter, or are you going into new product also? Because I remember there's a German tech you have, and the way India is placed now is you can actually go into other countries also, the non-US countries also. So what's your strategic plan on that?
So I think apart from US, also UK and Europe, we are doing great. We have a lot of inquiries coming in from the Europe with the this. I mean, European deal gets signed, it become more. I mean, more doors are getting open for us, and we are going to increase our presence in Europe also. We already have a substantial business in Europe, and going forward, it is going to increase only. We are working with all the big brands of this segment. We are working with Brohe, we are working with IKEA. In the UK, we are working with the biggest company, Howden. So I think from here onward, we are coming from Europe. And talking about the new market, I think we are doing good in GCC market. We entered last year only from almost nothing to we already crossed the revenue of 25 crore. So I think new and emerging market, which is like GCC, South Africa, Southeast Asian countries, New Zealand, and Australia. I think we are going across all the new geography, and this is going to add business on the export side.
Right, and Anandji, of course, the last question is there, and I'll try to put in one more question with it. Your important capacity additions which are happening, there was some delay because of course, the global tariff issue. In fast motion, what are the important dates for your, plans to start? And April 4th, everybody is waiting for it. In the con call also you mentioned. Just give us a little flavor of it, what the announcement can be around.
Okay. So I think this capacity addition, we already said that from quartz-sink 1 million, we are adding another 100,000. That will become operational from April onward. Steel sink also, we are adding from 180,000, another 70,000 getting added. That will also coming from the April onward. And on the appliances side also, we are going to activate another 50,000 capacity. So appliances, as on date, we have 50,000. We are going to activate another 50,000 in the next financial year. Faucet side also, we have 50,000 current, and we are going to add another 50,000 in the next financial year. So I think on the Capex side, we are going to have all this coming in the next financial year. And of course, we are also very excited about our expo, which is planned. So we'll come out with more details once we are ready with the announcement.
Right. So of course the street will be looking at, but nevertheless, the company seems to be, coming out from a bad trajectory. Thank you very much, Anandji, for your time, for giving and clearing the doubts of all our viewers and the people who write to me for KYC show. Thank you very much and best of luck for the future.
Thank you very much for having me on the show. It's always pleasure talking to you. Thank you so much.
Thank you, sir. So, of course, this was the management of Carysil, and interestingly, I'd like to point two things from this conversation. The first is, seems like the worst is over, and also, we can see the old capacity expansions which were delayed last year, they themselves are now starting to go up. So, that is something which is very bullish coming in from the management. But that's all, folks, for KYC. Stay tuned for the next show.